What's up, everyone? It's Scotty with MoneyVest. So markets just continue to cruise higher and higher. There is absolutely no limits right now. All bets continue to be very much on as we see so much momentum in the markets as we break out to a new higher high and a breaking out above our levels from back in July. So hope you guys enjoy this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount that does expire in now 10 days if you want to take advantage of that and of course get access to all the members-only private videos, Excel spreadsheets, and of course a lot of other benefits, including our discussion channels on Discord and trade alerts and trade ideas as well. And I also want to remind everyone that we've got a brand new psychology course that has been launched over the weekend. Coupon code 50% off is going to be the launch coupon code. And again, there is now 4 courses: fundamental, technicals, options, and psychology, and everything right now is 50 to 60% off on the back of Thanksgiving. So again, I want to wish you and your family a very happy Thanksgiving week and a very happy Black Friday. So link's going to be down below if you want to join. Of course, take advantage of these discounts. These are the biggest sales of the year that of course we have on our website. So coupon code is going to be Thanksgiving. And this right here, of course, you can join the Discord and the Patreon link as well. So let's start with the Dow, up over 200 points on the back of a very strong close from Microsoft. Microsoft and NVIDIA, they were both hitting new highs, I think new all-time highs. If you come over to NVIDIA, up a little bit over 2%, coming up to $505 per share. So all-time high for NVIDIA and an all-time high for Microsoft, up over 2%, also hitting highs of $378. Market cap now eclipsing highs of $2.8 trillion, and Apple here right now is sitting at $2.978 trillion, just a little bit shy of $3 trillion. So about $170 billion or so more needed in order for Microsoft to be the most valuable company, publicly traded valuable company in the world ahead of Apple. So I already did a video on Microsoft and what happened and transpired with OpenAI and Sam Altman, so definitely do check out that video as well. So one of the things that's fueled the rally recently since the end of October has been the 0.5% drop in treasury yields. So the bond auction from 20-year treasuries was actually quite reasonable and decent today because the 20-year treasuries continue to drop and they are down about 0.5%. That continues to suggest that the demand was there. It got absorbed pretty well. $16 billion was a low amount to begin with. Mentioned that over the weekend video as well, that it's going to be a very, very important catalyst because at 1 p.m. Eastern is when the bond auction takes place. And 16 billion is really not that much of an amount. So it really shouldn't be an issue for the US to find buyers for that auction. It went well. Yields are lower. Markets obviously charging higher to higher highs. So we still see volatility in the bond market, but so far the drop in yields has really supported those riskier asset prices and will be the key focal area for us in 2024. This was Tom Hanlon, senior investment strategist at Ascent Private Capital Management of US Bank. And of course, when you take a look at the heat map, it is nothing but greenery here with technology, of course, rallying very, very nicely with NVIDIA, AMD, Intel, Broadcom, Microsoft, Apple, Amazon, Tesla, Google, Meta, everything, all tech sector here, pushing higher. Some of the stocks that we have obviously been concentrated in very much. VUG was up a little bit over 1% on the day. And we did have SMH, which is a semiconductor ETF that I've been buying, getting up over 1.4%. And almost actually hitting a new all-time high today, 165.44. So congratulations to anyone who has been buying semiconductors, semiconductor ETF more specifically. It's up a little bit over 21% since the end of October as well. So this is the entire market. Broad participation. We did have a lot of momentum on the day, and this right here is the overall day, week, and month. In the last 1 month, energy is the only sector that's been struggling, but everything else is green. Everything else has been pushing higher. So we've seen nothing but a lot of momentum and a lot of sort of greenery and of course price action move to the upside for all sectors in the S&P. So all 11 sectors are doing really well. Soybean, palladium, heating oil, orange juice for the win. We got coffee prices, copper, everything pushing higher with volatility, silver, natural gas, corn, oats, and wheats pulling back, with Bitcoin just a little bit over 37,000 again, and Ether jumping back over to $2,000 as well. So this right here is the indices, with the Dow Jones rallying over 200 points, S&P up over 0.74%, and the NASDAQ pushing up a little bit over 1% on the day to trade as much as 14,284, with 3,500 stocks advancing on the day today. So again, a very, very nice momentum and rallies coming in for individual stocks. So starting with volatility. we have now dropped to 13.45. So we continue to come down. So we are now again sub 14 levels, a 2.61% drop here on the day. And by the way, you can get access to all these spreadsheets as well. So if you come over to our MoneyVest platform, you will be able to access all the intrinsic value. So this right here is going to be available for you. These are going to be constantly updated. There's going to be risks highlighted for each business, and of course the intrinsic value with respect to where the price is and how much of a drop needed for each stock. And of course, you do get access to a lot of other data sets and a lot of other really interesting tools. So if you come over to volatility summary, so we are now in the 21st percentile with 13.44 as being the level. And look, I know we've been talking about this over the last, I would say, 5 to 7 trading days where I've mentioned the markets are overbought. We're getting up to very, very extreme levels. And it's not really a question of if, it's a question of when. And that analysis continues to be true, right? Yes, markets are rallying. This is very great, right? I have a lot of VUG. I've got a lot of SMH. I've got a lot of tech stocks. I've got a lot of, I'm mostly invested long term and on the long side. I'm not shorting this market. So I'm very happy, right? Very, very excited about the possibility the markets can go higher. That's totally fine and dandy, but we have to be aware of where the volatility is, because this is all statistically driven. This is all historical patterns every time the markets get overbought, right? Think of it as like a rubber band, right? Once we start to become a little bit more stretched, what happens, right? We start to pull back, right? It kind of pushes right back in, and then we move that rubber band once again far apart. We start to stretch that once again. And it's the same concept, right? Market moves in cycles. It moves in that cyclicality nature of the markets is becoming overbought, coming down, seeing a pullback, seeing a correction, pushing back higher, coming back down, pullback, correction, whatever it is. So we are now in the 21st percentile, trading below 14, 13.91 as well. So we are, as soon as this drops below the 20th percentile, we're going to switch this from normal to rare, which obviously is going to be very, very interesting from a market perspective. And if you take a look at, percentage of stocks trading above or below their moving averages, so NCTH is another really important number and metric that we look at 43.49. So another jump of close to 4%. And this is end of the day. So this may not have been updated yet because it's showing us still from November 17th, so Friday. After today's rally, I'm assuming this number is going to be well over 50%, meaning majority of the market is now trading back above their 200-day simple moving average, which once again continues to tell us that there is a broad market participation, but a lot of stocks are starting to become more on the overbought side. Again, this is the other indicator that we look at. S&P 500 stocks trading above their 20-day moving average, and you can see that this right here is going to be that one. So previously we were at 67.99. This number is going to get updated after today to well over, I'm assuming, 90% or possibly even higher. And this is exactly why we need to be a little bit more cautious now moving forward. And look, I totally get this. I mean, the thing is that we've done this analysis so many times over the last 3 years that I totally understand where people are coming from. When markets are pushing higher, it is very difficult. I get it. It is challenging to envision or to picture what a pullback or a correction may look like, right? Nobody wants to talk about it. Nobody wants to think about it. Nobody wants to experience it because we're having so much fun. Everything is pushing higher, and we want the markets to keep going up. But we all know, deep down, we all know that this is not going to last forever. This is not something that does last forever, right? Everything eventually comes to a halt. Everything obviously starts to pull back. And I know I sometimes can be the bearer of bad news, but I'm coming from a place of good intention, right? I want to give you the objective and the reality and the truth and the unfortunate reality of the situation, which is to say that, okay, look, we're having a very nice rally. We're seeing momentum. There's a macro element to it because yields have been dropping. Dollar index has been dropping. Crude oil prices have been coming down. So the trifecta, right, the trouble trifecta, pushed higher from July all the way through October. And since October, these three things that I mentioned, the yield, the dollar index, and crude oil prices, they've all been coming down, pushing the markets back higher. But how long is that going to go on for? Nobody knows the answer to that, but we do know the risk reward is becoming more and more unfavorable as we continue to move higher. So that is something to keep in mind. And again, keep a close eye on some of these other indicators like the RSI, where we are in the RSI reading. I'll update this number. And right now on the daily time frame, if you take a look at the RSI on the S&P, it is now at 71.56. So this number will also get updated, and it's most likely that we are going to be at 71. So 71.56. So we are somewhere between this and this, right? So 70 and 73. So we are now in the 90th percentile, folks. We are in the 90th percentile for the S&P 500 RSI. So that's really where we are. You know what? Let me just update this number live in front of you guys, and that will show you where we are with the actual RSI reading here. So okay, so this is where we are, and these are all the spreadsheets. Again, I'm going to go over to the RSI reading. I'm going to update this number to 71.56, right? So 71.56. Hit enter, and we are now in the 92 percentile, folks, okay? And this just changed to rare. You can see that it actually changed from normal to rare, right? If I move this up to 71.56. So what does that actually mean? That simply means that S&P 500, and this is actually very, very interesting analysis that I want you to understand and what this actually means here. Now, we're looking at 22,866 observations, okay? So if you do the math, right, if you take this divided by 252 trading days in a year, we're going back over 90 years, okay? We're going back 90 plus years to understand the RSI reading for the S&P 500. So in over 90 years, the number of days the S&P 500 stays with an RSI at over 70 is 2,349 days. That comes out to just 10.27%. Okay, so simply, in other ways, simply put, 90% of the times the S&P 500 is actually trading with an RSI reading of below 70 on a daily basis. So just how rare this is now, right? Considering how much the markets have moved higher. That's what I want you to understand from a more logical perspective. Volatility, we've already gone over. It is already at a 21 percentile. So the moment, let's say we drop down to 13, we're going to be in the 17 percentile. And let's say if you drop down to 12.5, we're going to be looking at 13.6. If you drop down to, let's say, 12, we're going to be dropping down to 9.36 percentile as well, which I guess it should already be at a rare number. Anything that's below, I would say, 13 would be rare. So now if you drop down to 12.5, will turn into that rare category, right? So something to keep in mind. And then finally, if you come over to the NASDAQ NCTH, right now it is going to get updated. It's not updated yet. So if you take a look at this number, 43.49, we are now in the 42 percentile. So we're kind of like somewhere in the middle here. But again, the higher this number goes, the more we move towards the red territory, which means we are becoming overbought here. And then finally, if I update this number, which is the percentage of stocks trading above their 20-day moving average on the S&P 500. That's going to be S5TW on your TradingView. By the way, TradingView also is having a massive sale. Link's going to be down below if you want to join TradingView as well. I think they're doing like a 60 or 70% off for Black Friday. But 86.08 is going to be that number, 86.08. Hit enter, and we are now, look, 93%, folks. We are in the 93 percentile already, and days above 80 is only 15%, right? And this is again turned into a rare category for us when we look at the technicals. S&P 500 valuations, this also gets updated automatically each day. Again, you have access to all these spreadsheets. You can access them. And right now where we are at 45.47, we're looking at over 20 times earnings multiple on the S&P 500 based on the 2023 earnings expectations of $225. So that's where we are with the overall analysis. Now let's just jump over to the technicals and talk a little bit about the market. So this right here is going to be the chart talking about the S&P 500. So very, very nice breakout above 4,500. So we were watching that level, very, very important level. And my next short trade. So I did take a trade on SQQQ today, did not work out. I did risk 1.25%, and that's totally fine, right? You're not going to win every single trade, but my next trade opportunity on the short side is going to present itself at 4,600. I'm most likely going to take a very sizable position on SQQQs at 4,600 on the S&P. If you do see some more potential momentum here of another 1, maybe 1.5% on the S&P 500, and considering how overbought will become from a technical perspective, I think the risk reward setup would be very, very good. So 4,600 is going to be that next resistance. Support level is going to stay put right here at around 4,500 for the S&P. And the NASDAQ here also with a very nice breakout. A next target and resistance is going to be at 14,400 400 to watch for the NASDAQ as well. So that's going to be that level to watch. Moving forward, that's going to be that resistance and support level is going to be at 14,100 all the way down to as low as 13,876. Talking about Apple here, Apple on the other hand, also seeing a very nice breakout beyond this previous high of September. It looks like we are making our way up to that potential all-time high here, 196, 197. So that's going to be that resistance support level now is going to stay put. Roughly around 189, close to $190 per share for the company. And of course, not to mention that we are extremely overbought at the moment. Talking about Amazon, same thing, approaching that resistance at 146, 147. So that right there is going to be that level to watch, with the support level is going to stay put at 135 down to as low as $124 per share for Amazon as well. Talking about Tesla, and Tesla here on the day, very, very flat, up just over 0.5%. Next resistance really is going to be $240. So this right here is going to be that level to watch. And right now we're seeing a little bit of a lower high and a lower low pattern. So a bit of a downtrend for Tesla. Next resistance is going to be at 240 all the way up to 249, close to $250 per share. And support level is going to stay put at 200, low 200s for Tesla moving forward. Now, NVIDIA, of course, with a massive breakout above this resistance. So again, earnings are coming out tomorrow. We are coming up to an overbought territory. And not to mention that we are starting to see a bit of a breakout above this resistance. So tomorrow's earnings are going to be very, very important for NVIDIA as well. Just be careful. I would be very careful with NVIDIA here, considering how much it's already moved up. And support level, of course, is going to be in the low 400s for this company. Advanced Micro Devices also on a very similar trend, continues to move higher. So up a little bit over 75 basis points here on the day. Right now resistance, as we have talked about, is going to stay put at 121. Support level is going to stay put at about $112 and all the way down to as low as low 100s. And of course, we got a overbought RSI and MACD as well for the company. So just got to be very careful here. Of course, SMH also hitting a new all-time high. We went over that earlier, but again, extremely overbought at over 76 RSI, and MACD also very much on the upside as well. Talking about PayPal, and PayPal here on the day also seeing some decent move, 80 basis point higher. Support level is going to stay put at $56, $57 per share, with a resistance all the way up to $65 per share, and the support level is going to stay put at 50, 51 bucks for PayPal. So that's going to be that level to watch. And talking about Visa, and Visa here also very nice validation of that support at 245, right? So literally at 245.60 validated that support, but of course now getting rejected at resistance at $250. So high for the day 250.93, literally just trading in that range. And of course, not to mention we are becoming a bit more overbought as well. Talking about Meta platforms, and Meta here hitting a new 52-week high at $341, $342. Very nice potential higher high here, as we have talked about in our previous videos. And of course, a higher low as well. Support level is going to stay put inside this green rectangle at $315 to $330 for Meta. So very, very nice move to the upside for this company, and support level is going to stay put at $315 to $330 per share. Talking about Netflix here, and Netflix also continues to charge up almost 2% higher. 485 is going to be that level to watch as a resistance. Support level is going to stay put at $452 per share, with a very extremely overbought RSI, overextended MACD as well. And support level is going to stay put at $452 per share. So there's no doubt. I mean, momentum, technicals and sentiment very much in favor of the bulls right now, and that's phenomenal. That's great, but we all know, that this is not going to last forever. And it's not a question of if, it's a question of when. And finally, we've got Google, Microsoft. Google here also with a very strong rally up over 72 basis points. Resistance is going to be all the way up to this area inside this red rectangle, and of course support level is going to stay put down to 126, 127. Finally, Microsoft here, new all-time high. There's nothing really to go over, up 2%. Support level is going to stay put at 366, but of course this is the most concerning piece here, with an overbought RSI and a MACD as well. And technicals here do suggest that, again, the risk reward is not that favorable considering where Microsoft's trading at the moment. And then finally, we got Enphase and Costco. So Costco here on the day was a little bit of a bounce back up. So it did, drop on Thursday, on Friday, drop a little bit over 3%, 4%, and then it's now starting to bounce back up from that support up 63 basis points, and resistance is going to stay put at $603. And finally, we got Enphase with a massive rally up over 6%, back up to over $98.50. So in the last couple weeks here, it has already gone up over 33%. And next resistance and target is going to stay put at about $108, $109 per share for Enphase, with the support level is going to stay put at 91, close to $92 per share. And of course, RSI MACD showing some more signs of potential upside for Enphase. So hope you guys enjoyed this video. And again, I want to put more emphasis on these charts. These are all going to be Excel spreadsheets that are going to be available for all of you. You can literally just access them. And a couple things I want to mention is the current read. Over the last 90 plus years, the current read on the S&P 500's RSI is in the 92 percentile, which is rare. And we don't see that very often. So definitely caution is something that I am going to employ in my strategies moving forward. Volatility also coming down to 13.44. Another 0.44 decline in this index will also turn from normal to rare. And then finally, if you come over to the S&P 500 and the NASDAQ, so NASDAQ here is still in a normal category, but S&P on a shorter time frame on a 20-day moving average basis is in the 93rd percentile, and we are now also turned rare for this index. So hope you guys enjoyed this video. We'll find out eventually how this all plays out. Make sure that you drop a like, subscribe to the channel. Link to our Discord Patreon is going to be down below. 16% annual discount until the end of this month. And of course, you do get access to all the members-only benefits, private-only videos. Don't forget, coupon code LAUNCH and Thanksgiving. You can use that for all the courses, individual courses, and bundles to get 50 to 60% off. And as always, happy investing. I'll see you all in the next video.